Welcome to Option Trades Today. I'm Tony the Bat Batista, and I've got not one, but two trade ideas for you today. And I know, J-Dub, you called in today for our show, and I appreciate your continued support and the very kind words. I told you I'd have three trades for you, but I can only find two. What can I tell you? I'm a disappointment to you, too. But let me talk about these two trades. First of all, even the S&P is down $20.75, not too far off of their lows. Interesting enough, volatility is only up a nickel after expanding quite nicely yesterday, and one of the reasons why I thought I'd be able to find more than one or two trades, three trades today. But I had to go back to the well here on a few trades. Let me explain to you why. First of all, if you go to the follow page, it's right down here, and click on follow, you'll see all of the follow traders. I am Bob the Trader IRA in here, where I push through all of the accounts. And when you take a look at it here, you can see that in Tesla, I closed my trade that I put on from this very podcast, or if you're watching on YouTube, which I think is a better place to watch this because you can actually see where I am clicking on the screen as opposed to the podcast, which is just my voice. The YouTube has video also. You can see I closed this trade that was a 1/2 ratio spread in Tesla for about a 75-cent profit. I put that trade on 11.17, about 40% of the pop. Now, the reason why I closed that trade was I wanted to put on a trade in Tesla that has, well, more risk and more reward. Let's take a quick look at Tesla if we could. IV rank of 26 on the bottom here. I've got in our charting package. You can have it too. That's a Tastyworks IVR, high and low. And you can see here volatility has been creeping up ever so slightly, with Tesla actually going taking a little bit of a breather from its downturn and catching a small little bid here. What am I doing in Tesla? Well, I'm going to play both sides. Remember, I just had on a put ratio spread, so that's a slightly bullish position, omnidirectional but bullish. I'm going to put on a more neutral position. Again, I'm going to go to January with 52 days. You know I like to look at how the IVX 5-day change has been going on. You can see that volatility is basically unchanged here over the last 5 days in Tesla. It obviously has no earnings. IV rank of 28 and change. So since I had an existing position on Tesla, I'll put another one on. My old position was bullish. This position is going to be a little bit more neutral. What am I looking to do here? In Tesla, I'm going to go up to the 240 calls. Fairly delta neutral here. Those calls have a 13 or 14 delta to them. Delta equals directional bias or shares. That's trading for around $2.44. And then I'm going to go down on the put side. I'm going to go down to the 135s. The 135s have approximately the same delta, maybe a little bit less, 11 deltas, and you can see that this spread is trading for $5.60. It's been oscillating around. I've traded it as high as $5.65 today. I sold it at $5.60, $5.65. 563, all in here. As the stock moves a little bit higher, because this has a little bit of short delta to it, the price will probably go a little bit higher. If volatility expands, it'll probably go a little bit higher. But this overall trade has a 78% pop. That's a 78% probability of profit. The probability of profit is making 1 penny. It has $17 a day in theta decay, and it does use a large $4,400 in buying power. Now, the trade I had on the put spread used slightly less. I think it was around $3,000 in buying power, or maybe a little bit less than that. But again, by taking 75 cents, I could only make about $1.80 on that other spread. Here, I can make significantly more if I'm right on this trade, which means I want the stock to just hang out right here. I'm well outside or just at the standard deviation to the downside, and I'm outside the standard deviation to the upside. Looks like there's a little bit of put skew in Tesla. That's my trade in Tesla. My next trade that I'm going to take a look at is in Microsoft. Now, full disclosure, I had a trade on in Microsoft. Again, I'll go back to this follow page. If you want, you can search by just the stock, MSFT. I have my name clicked here, so it's just going to show all of my trades. You'll see here the other day on the 18th, I closed this trade for $11.80. Well, I had been working this trade for quite some time, actually a couple of months. We took a small profit on this trade from 10.27, almost a full month and change was working this trade. So Microsoft has been a little bit of a tough trade for me. Actually, I would have kept this trade on. If you click on duplicate trade, I want to show you that I don't always have the best timing, just like everybody else. If I click on duplicate this trade, it's going to ask me to agree. Of course, I agree. It's going to tell you that the prices will be unlocked, so be careful with your pricing. I paid well over $11 for it. It's trading under $9 now, so if I would have waited, I would have been able to make more money. That makes me mad, so I'm looking for another trade in Microsoft. Let me show you what I'm going to do. Before we do, I'm going to go here again. I'm going to take a look at what Microsoft has been doing. Ivy rank at 27. Again, okay, not great. You'll notice here that all of the Ivy ranks are relatively low after volatility has gone down quite nicely over these last 2 weeks. One of the reasons why I couldn't find a third trade. But look at this, the IVX 5-day change up 2.2%. That's a decent sized move with the stock going lower by $2.33. Let's take a look at what Microsoft has done. Obviously, following the market here, Microsoft has a good correlation to the overall market. Matter of fact, the correlation in Microsoft is 0.88. That means basically it moves just like SPY or the Qs. So Microsoft, if you have long delta in there and long delta somewhere else and long delta in the market, this is going to be another long position. So maybe you want to put on something that has a little bit short delta. I'm fairly delta neutral in my overall portfolio, so I'm going to put on a trade here with a little bit of long delta in Microsoft, ever so slightly, but I'm going to show you how you can tweak it if you want to change that. I'm not going to go to the December options with 17 days. That's not enough time for me. I'm going to go to the January options with 52 days to go. I'm going to use a little bit less buying power now because I used more buying power in my last trade. I'm going to look here, and people always ask if I'm doing a put spread or a put ratio spread, where do I like to go? I like to be somewhere around the 15 delta options. That's at least where I start. So what am I doing here? I'm buying the 215 put one time, and I'm selling 2 of the 210 puts. Now, that only uses $2,100 in a margin account, but I know a lot of people trade in an IRA account or smaller size account, and $2,100 might be too much for them, or they don't like the undefined risk. So I'm going to go down, and again, you can do this when the options are trading very, very tight and liquid, and you can notice here that the options are very, very tight and liquid here, a penny wide, 2 cents wide. That's how I define it. Now look, this is interesting. In a margin account, without defining the risk, you're actually using less buying power, $2,170 worth of buying power. When you define the risk, which is kind of weird to think about, but when you define the risk, you're actually going to be using more buying power. Why? Because those spread now has a defined risk. That defined risk is going to be equal to the width of the strikes of the spread. You take the credit out, minus the 210 from 175, you're left with $28 and change, and that's why the buying power is $2,800. So even in a smaller sized account, you can define the risk if that's what makes you happy. You can also change what strike you go to. For me, I'm going to go to the 175 puts. I was able to do this spread at $1.48, so Microsoft has rallied a little bit. The low in Microsoft was $2.38 and change. It's rallied a little bit. So I'm going to just put this, I put this on at $1.48 in credit. Now, what I said, you can change this a little bit because this has a 90% pop. It's got 8 long delta. Remember, I'm going to show you how to change that delta ever so slightly and not use any more buying power for those people who the $2,100 or the $2,800 is too much for the amount of credit you receive. Let's take a look at doing something a little bit different. The theta decay, meaning how much you get for that risk, is $3.65 a day. And the beta weighted delta is for, remember I told you had a 0.88 correlation. This has 8 delta. It comes out to just over 4.5 deltas. It does use $2,800 in buying power. Okay, what can I do if I don't want to be bullish in Microsoft and I want to be more omnidirectional? You can go in conjunction. You'd have to do this as 2 separate trades because you can only do 4 legs at a time. Here's 3 legs. So I'd have to enter that order. You can have that order working if you want. So you can put it in above the market and see how that works for you until you decide to either keep this one trade on or put a second one on. Let me show you what I'm talking about. Let's go to the call side now. And since we're already using the buying power on the put side, you're not going to use any additional buying power. What would I look to do here? And you know what? Maybe you're not bullish on Microsoft. You want to be bearish. Well, let me show you what you can do here. You go to the same approximate delta. I'm buying the 265 calls one time. I'm selling 2 of the 270 calls. That's $5 wide. I prefer to be $10 wide, and I prefer to get at least $1 worth of credit on that one by 2, $10 wide. I can't do it in Microsoft just because the monthly implied volatility is just too low at 32%. So I'm going to have to go $5 wide. I buy the 265, 270. You notice I only get 93-cent credit. Let's go $35 wide because that's exactly what I did on the put side. So we'll go up to the 305 calls, and you can put this trade on for around 77 or 75 cents. If you notice something, and I hope you did, the put spread or the put ratio spread or broken wing butterfly, if that's what you want to call it, the 1 by 2 by 1, was trading at $1.48. At least that's where I put it on. It was around $1.40 or so when we're looking at it on this podcast. So it's trading for almost twice as much as the call spread. Does it make one trade better than the other? Well, the probability of profit is very similar on both of them, 88% pop here. You're using the same amount approximately buying power. Obviously, the buying power is a little bit greater here because you're receiving a little less credit to begin with. But if you already had the put spread on and you're a little bit more neutral, I'm a little bit more bullish. If you're a little bit more neutral and you put both sides on, you're not using any more buying power, so it'd still be that $2,800 or so that you're putting the trade on for, and you're collecting another 75 cents or so more in credit, but you do have risk to the upside. The other trade had around 8 long deltas. This has just about 8, 7.5 short deltas. Obviously, if theta decay is going to be less because you're collecting less credit to begin with, and the beta weighted delta is approximately the same. All right, those are my 2 trades for you for option trades today. I hope you tell your friends about not only this podcast and this YouTube broadcast, but also about Tastyworks. That's tastyworks.com. That's the brokerage firm that I'm using here. I hope you support us too. Take advantage of some of the many offers that they have. Check out tastyworks.com and keep these lights on here. Appreciate your time.